The one candle box strategy is the same strategy I used to finally quit my 9 to 5. The only reason I was able to use this to escape the 9 to 5 was because it allowed me the time flexibility to actually spend less than 90 minutes a day on the chart and actually focus on my day job. It was a best strategy that accompanied my responsibility, my schedule, and my busy lifestyle. Now, in today's video, I'm going to show you guys the journey of me creating the strategy and some of the pitfalls I experienced in the beginning that some of you guys could also be experiencing that could be drawing down your win rate. And then I'll show you guys exactly how to fix those mistakes. Now, as you can see, when I started trading, this was the results I had. I had close to 30% win rate, and I was majority of the week just failing every single trade. The only reason for this was because I was trying to enter trades while I was going on my lunch breaks. I was staying up all night watching the charts for a setup that would never reveal itself. And that is why I had such bad results, especially on the market. Now, the one candle method is a method that is repeatable, that you can expect to happen every single day because the market is forced to print that candle. Now, that draws away the FOMO, and that also draws away the uncertainty that many traders fall into. Now, as you can see, with those three confirmations and confidence, that completely shifted my entire win rate for this strategy. Now, why do we use the 4-hour breakout as our primary strategy when we have those impulse markets? Okay. Now, for the first reason, it takes advantage of the market open manipulation. Now, I trade New York Stock Exchange Open, and there's always some sort of manipulation that happens to draw in those beginner, unexperienced retail traders. Now, this also gets you into those positions that always seem to run away when price feels that it's already expanded beyond your entry and you feel that it will not retrace back. This gives you a good source of re-entry, as well as eliminating that FOMO aspect or that impulses that you might be struggling in with your trading. It's not all psychology, it's a strategy that leads to those psychological problems. And then now, the final and most important step, it saves you valuable time. It saves you time to focus on your family, saves you time to focus on responsibility. It saves you time to focus on escaping 9 to 5 and finally living debt free. This is the main goal of the strategy, because without it, why would you even be trading? Now, I want to show you guys a normal example of what would go wrong and how some trades would be trapped when using strategy. Okay, as you can see right here, we have our option, and here is our 4-hour candle. Now, if you guys haven't already watched the full video of me explaining everything about the strategy, I will link a video above on how to do it, but I will also give you guys a brief explanation further on. Now, as you can see, this is our 4-hour candle of the previous hour, and we're going to use this as our box. We draw from the high to the low, and now we get our quadrants. Now, as price breaks out of it, we want price to come back into one of the levels, retest it so we can trade upward. Actually, probably I'd say retesting, take that out, okay? Now, once we get this breakout, as you can see, we're already looking immediately to enter. Now, this is a rookie retail move. Why did I say so? Because they're just trading the breakout. They're just trading impulsively off of the recent candle. This is how they entice you, and this is how they get you into losing trades. As you can see, price goes up, and then we have that 9:30 market manipulation. There is that death candle, that manipulation candle, which is why I say it's very important that you avoid the start of the hour trades so you do not get stuck in between that opening tussle. As you see, this does end up going to the opposing side of the range instead of going into a breakout. Now, I do have another strategy that is used for days like this. We'd actually use a reversal instead of a breakout. Now, while you guys want to learn about that, you can just search up Nova Legacy CRT and you'll see a good amount of videos just explaining the entire strategy for you guys, okay? But as you can see, this is a losing trade. But everything you've learned so far is only one part of the equation. And it means nothing if you keep on repeating the same mistakes and the same routine that has kept you unprofitable or in the break-even phase. Now, you've probably watched the multiple YouTube videos, you've gone through a ton of courses, and you've had years of on and off trading, and maybe even in that time span, you've passed a challenge, but nothing has truly clicked for the long term. Now, my goal is to relay every single strategy and technique that transformed my trading, but there's only so much I can do through a YouTube video, which is why For this week, I'm opening up my direct coaching and I'm opening up 10 more spots. Now with this, you'll work personally with me to become a profitable and funded trader where we then reach your untapped consistency, have you skip 2 to 3 years of wasted guessing and build a lifelong skill that outlives the markets for generations. Now, we firstly do this by having you hop on your first strategy call with us where you learn the 1 candle a day strategy. You then gain my exact playbook I use every single morning, and we then identify your unique problem that is holding you back from your profitability. This is then all put into an automated trading journal that we track every single week to iron out any kinks. We then go on to the next phase when we actually have you stacking on profit accounts by using a risk dynamic plan tailored to you for your schedule, your win rate, and R. We then show you the secret techniques that the prop firm space are using to keep traders failing. We then finally end up securing your very first withdrawal. Now at this point, trading becomes fully exciting because you're doing the exact same thing, focusing on the exact same candlestick, but you're just doing it across multiple accounts and getting those consistent monthly withdrawals. So if you're ready to truly change your trading and have that clarity and consistency, make sure to apply in the first link in the description. And once again, only 10 spots available and we are using priority access. So do not waste a second. Now, this is exactly what people get wrong, and this is what caused them to fail. This is also what caused me to have a 30% win rate, even despite also having to try and do all of this within a very short work break. Now, our candlestick can be any 4-hour candlestick, but there are certain candlesticks that have higher probability than others. Now, once you have that candle, you want to mark out your premature, optimal, overextended, and dated zone. Now, just in the naming, you are mainly looking to enter within that optimum zone, which lies in the 25 to 0.5 levels. And I will put an image of my exact Fibonacci or Gann box setting so you guys can actually just copy and paste that, right? Now, once we get a breakout, we're looking to buy in that direction, or if we get a breakout of the downside, we're looking to sell in that direction, given the market context. Now, as I said, the few things people get wrong is that they use the premature zone for the entry. They then also are trading breakouts in a non-volatile market. You only want to be trading your breakouts and impulsive moves within an impulsive continuative market. And I've said this before, you just want to follow what the market is already giving out to you. If it's not showing you that high probability conditions, just showing you low conditions, you want to then shift and be adaptable. That's why there's 2 main strategies I use, because I can be adaptable in any market sense. Now, the final and last step is not using the IRS model for your entry. Now, this has nothing related to the taxman, but I will show you guys how we can use this to get on the good side of your taxman. Now, what's the winning formula to this? You want to be using your optimum zone, which gives you a good enough retracement. It's not a full 70% retracement. It's just good enough to at least get you with the other buying participants so that you are trading that real move. And then you also want to be having that higher time frame volatility. If you're trading breakouts on your lower time frame, you want to make sure that the higher time frame is already having that volatility to reach an objective, a drawn liquidity that's pushing the market in one direction. You do not want to be playing within a chop market. If you're trading consolidation, you will get consolidated out of the market. And then finally, you want to be using your RS entry just to give you that high probability entry without any hesitation, without any remorse. Now, how do you actually draw your 1 candle box correctly? This is another thing I see a lot of students do get wrong. Now, as you can see, this is a primary uptrend, what we would ideally be looking for, okay? Good enough of volatility spikes in the market. As you can see here, impulsive. This is chop in these upper times. You want to avoid that. This is chop. You want to avoid that. Now, as you can see, we're drawing our candlesticks based off of what? We had previous bullish candles, so we're marking the next bullish candle as our 1 candle box. As you can see, price refuses to disrespect this level because it wants to follow that impulsive and continuative nature. As you can see, once again, we have bullish candles that lead to a preceding bullish candle, which we use for a 1 candle box. Once again, it is impulsive. Once again, it is continuative. It is not that we're trading within this uncertainty. We're trading where it's already laid out the path for us. Okay, that's what I refer to when I say you want to have that higher time frame volatility. And even if you do not want to use the 4-hour time frame as your higher time frame, you can use the 1 hour, the 30-minute, even the 15-minute, but you still want to stick to these core rules because this is what will lead you to success. Okay. Now, these are the type of candlesticks that you would be seeing once you are drawing one candle box. Remember, we're still focusing on the higher time frame. We're not delving into the lower time frame yet. We're just laying the foundation. Now, this is the highest probability candle you want to be using. Why did I say this? It gives you enough room of the wick being placed. We can expect that lower time frame movement for it to draw down to. Remember, with this, a lot of the time we're focusing on the close of the candlesticks. We want price to come below it. With this, price can give you that 25% level retracement, come below the close, and then push higher. With this candle, as you can see, the close is way below over here. This would need for price to give you a much deeper retracement, which would then disrespect our optimum zone. As you guys can see, it's just basic knowledge of candlesticks that really lead to how you want to define the system. And then finally, this is a full body candle. There's no wick at all. With this, it's likely to be good for the impulsiveness, but a lot of the time you do not have a good enough space for price to really retrace into. We just have the close and price can just immediately continue with that. Okay. With these times, it's just best to really avoid it because it might just be a full on reversal of a major news event manipulation such as FOMC or NFP. So it's best to avoid these as these might just be trying to get you into a position that isn't the true one. Okay. And now the same also goes for a downtrend. If you're in the downtrend using your red candles because you're going to the downside, very simple. Price lays out the foundation and you follow that. So here we have our close of our bearish candle. We have that wick that gives price a good enough retracement of at least 25% of the candle's full width. And through that, we can have price go above the close and then reverse. That is our ideal scenario. With this one, we would actually want to flip this over, but still, once again, if this was our close, price needs to have a very deep retracement. Okay. We do not want that. We want a short retracement. And once again, this is a full bodied candle. With this one, we have that volatility of the bearishness, but you want to look at that candlestick with a bit more judgment, because if it's a day of major news event where it's FOMC or NFP, this could just be a open news candle to get everyone to start selling, and then we start reversing back bullish. Once again, that is why I say you want to have at least some wick so you have a bit of room for a good reversal. And let's actually put all of this into a winning formula we can use day in and day out. Now, so on the high time frame, the CD4 hour, I use that because that's the one that was best suited for my schedule at the time, and I just laid it over into my current lifestyle. Now, once again, you can use the hourly chart, you can use the 2-hour chart, anyone, just make sure you follow those core rules that we are going over. Now, once you have your bullish candles, you can really see this is a bullish trend. You want to just go ahead and mark the most recent bullish candle as your box. So you can see right here, this is the GAN box from the high to the low. It gives us our 0%, our 25%, our 50%, and our 75%, and finally our 100%. Once again, this is the premature level. This is the optimum zone one price to retrace into before we start pushing up on the lower time frame. Now, as you can see, just translating all that higher time frame data into a lower time frame view, there's a higher time candle, there's the lower time frame movement. So as you can see, we start the opening of our new bullish candle right over here, but we're not entering just yet. Even though we just broke out, we're not jumping in like all the FOMO traders. We're waiting for that reversal. And as you can see, at exactly 9:30, what happens? It takes out all those bullish traders. If you were going bullish here and you had your stop loss below the slow point, you have got taken out of your trade. And then you are starting to hate the market. You are saying, why is market targeting specifically me? And then you go into the whole rounds of strategy hopping. Okay. Remember, you want to avoid that 9:30 open, and you want price to immediately come into your optimum zone. As you can see, that's your price is right now. It is also bouncing off a fair value gap right now. And as you can see, we've just gone below our candle opening, which is why we're bearish right now. But this is the ideal zone where you want to be entering a trade. A good impulse, a short enough retracement for price to lay off another impulse. So as you can see right over there, we do get that bullish candle that confirms our entry right there. We do get a bit of a retracement into this order block, but then once again, once price has laid out the foundation, it has to follow that. Once again, this is by market design, and this is what I've seen over the last 5 years, which is why I was able to create the strategy, the candle impulse theory, the CRT, which is another I trade, and most importantly, our one candle box. Now, once again, there's one more important thing that you guys need. It is your IRS model. Now, what does this stand for? Impulse, range, and sweep. That is the formula to the market's manipulations. It will always follow this. As you can see, price once again now starts a new impulse, and then that is where we are entering. Okay, so once price has the first impulse, it starts to range, there starts to consolidate, it then sweeps out the liquidity from that range. It has been price starting to set itself up to make the reversal. It then starts to reverse in the opposite direction, thus impulsing the opposite direction, and you're looking to enter. Now, we could have entered at any point. I just wanted to enter as we started to break above this high point as a change in state or delivery. Once again, still any valid point of entry would have been from the sweep. Okay, IRS price will continue following this from impulse, range, sweep to another impulse, range, and sweep. Now let's actually go into some examples that you guys can counter pair with your to see how you can use this in real time. And once again, if at any point you guys do not understand anything in this video, or there's a certain still gap within your learning, make sure to book a free call, or you can get full access to my checklist I use day in and day out with this strategy. Okay, and you want to work with me one-on-one, so I can actually teach you guys this and give you all my knowledge I use to actually quit my 9 to 5 and leave it using a single candlestick. You can apply for the coaching below. Okay, so we're going to start off here with gold. Now, as always, you start your entire high time for analysis from the 4-hour time frame. Now, this part is more simpler. All you're doing is looking at what price did in the last few 4-hour candlesticks. You're not looking all the way back to the start of humanity. You're looking at the last hours, okay, because you're only been trading for the next 90 to 60 minutes. Now, with this one, as you can see, these are all bullish candles, and we had this impulsive move, and we want to follow that continuation. This is what I call high volatility. This is what I call continuation trading. This is what we want. Now, once again, you're going to draw out your GAN box. So we get it right from here. Open up your Fibonacci tools. There's GAN box. Click it, and then you're drawing from that candlestick's high to low. Okay. Now, I usually use the 5 candle for my entire box. Now, I want to show you guys an example of even if you missed that 9:30 open move, you can still latch on to another move. Once again, this strategy is made for those days where you feel like price is going to move without you. Those days where you're trying to FOMO in. It always shows you a second option. Okay, so it's right over here. This was already a successful one candle box. Price came down, wicked into the 50%, and then continue higher. Okay, now what if you miss that one? You're just taking the next current candle, which is the 9 a.m. candlestick, drawing from the high to low point, and then you extend it to the right. This is your candle box. Now, once you have that, remember, this is your premature zone, levels you want to stay away from. This is your overextended zone where price would start to reverse from that point. And this is your danger zone where there's most completely going to be a reversal day or a shorty day. This, once again, is your optimum zone that you're looking forward to. So in terms of high probability, this is S plus, this is B, this is C, and this is going to be D. Okay, so there you go. That's all your high time for analysis done. No crazy lines going across your charts, no extended BOS or change of character from the Neanderthal ages. It's just a single box of a single candlestick. Once again, this is what I use to actually trade within my 9 to 5. Now, once you have that, you then want to go down to your low time frame, immediately cutting out all the fluff, okay, that is associated to advanced top-down analysis. Now, once again, now waiting for that new candlestick to open. Now it is 12 o'clock, so the new candlestick has not opened yet. It's only going to be open at 1 p.m. That's why it's also important to understand the dynamics of your candlesticks, okay? So as you can see right there, there is the 1 p.m. candle starting to open up now. From this point, you want to get that entry into this area. So we just are playing around our entry point. Now, what are we waiting for? Okay, you can see I'm kind of just playing around with the chart. The reason is I'm waiting for my IRS. I don't just immediately jump in. If I immediately jumped in here, as you can see, I would have lost my trade, or even here, I would have lost my trade. Okay, we mark out the impulse. We then have a range, and then here importantly, here is our sweep. Okay. Now from this IRS, price will now create a new IRS model, which will start with an impulse to the opposing side. Okay. So from here, you want to go ahead and enter your trade. Okay. Stops just below your 50% level. Okay. In case of an emergency stop. And then you want to go for a very minimum 1 to 2. Okay. Once again, this is another trade. You'll still see the trade tomorrow. There's no need to jump all in. And there we go. Even in the late hours of the day going closer to market close, you still get in your trade. So even if you are working throughout 9 a.m., which I do understand the majority are going to work, even from there 5 p.m. and beyond, you can still get into a few good trades. Okay, so there we go. That is a winning trade over here. Let's go over one more to solidify this concept for you guys. Okay, now we're gonna go over a normal example I have done. So with this, as you can see, our last 3 candlesticks are all bearish. We want to follow that bearishness. We're not looking at the prior bullishness. We're not looking at this order block because that's all just extra fluff that just could confuse us. Okay, so it's right here. This is an impulsive candle, an impulsive candle. That's also what we want for our 4-hour 1 candle box. From here, we draw from the low now towards the high. Okay, and as you can see, we have our 4 quadrants. 25, 50%, 75, and 100%, more known as premature, optimum, overextended, and danger zone. Okay, now that that's all set up, we are now ready to go on to lower time frame and actually trade this move. I'm going to go on 3-minute time frame, skipping all the extra fluff. We don't have time to waste. We are very important people. We have busy schedules. Now from here, the first thing that we need to do is wait for that retracement into our premature area. Okay, so now with this, we're playing our price. We push down low, we break out. Yes, at this point, people would get prompted to want to enter, but not us. We are waiting for the high probability signatures. But from here, we still see price playing around, and there we go. Okay, so price immediately, look what it does. It comes in and taps into our zone, and as you can see, where's 9:30 open? There's 9:30 open. Once again, all that breakout was for was to get people into selling, just to take them out in market open. Now that we realize that, as you can see, just to zoom out here, this is our 25% price came into. Now we can actually immediately enter here. Why? Because we also have our IRS model. We have that price primary impulse. So there was a breakout impulse. We then have this little scuffle, which is the consolidation from price. And then here was our sweep. As you can see, this candlestick makes the major sweep. And then now what are we doing? We're starting a new IRS model as we impulse lower. Okay. So just to actually line all of this out, impulse, range, sweep, impulse. Okay, pretty straightforward. From this point, entry right over there, stops above your 25% level, and then once again you're going for that 1 to 2. Okay, now a lot of times you actually see that price goes beyond just your entry, and I actually have a full course on how to actually maximize your TPs so you can actually scale up accounts, and I teach that exclusively to my students. Once again, if you guys want access to that, there's a full application link below in the description that you guys can gain access to today. Okay, so we're going to play out this trade right over here. As you can see, without waiting, anytime prices goes toward your TP, and as you see, it just keeps on going in that direction for the rest of the session. Now that you guys have learned this, I do prompt you guys also go watch the video on understanding how to trade. I do also prompt you guys to go watch the video on how to understand the reversal markets, which is your T. If you do still want more information on trading the 1 candle box theory, just make source to this video on the CIT model, which is the candle impulse.